Good afternoon and welcome to your weekly FX options report. Today is Wednesday, June 2nd, 2010. In midweek trade, the major U.S. stock averages have rebounded and are trading higher by 1%. Now, the major equity averages have recovered from the sharp losses seen in the previous session. And as we begin the month of June, we saw that for the month of May, the Dow, Nasdaq, and S&P 500 all lost approximately 8%. In Wednesday's session, focus did turn to pending home sales for the month of April, which rose by 6%. Now, home buyers in the U.S. rushed to sign contracts ahead of the expiration of the government's tax credit. And focus now shifts towards the U.S. May employment report, which comes out at the end of this week on Friday, June 4th. The ADP report has been delayed by one day due to the holiday shortened week in the U.S. and will be coming out on Thursday. Now, shifting our focus on over to the spot FX market, the U.S. dollar is trading higher against the Japanese yen. Now, the yen has been hit across the board following the unexpected resignation of Japan's Prime Minister Yukio Hatoyama. Now, this did also trigger uncertainty about the Japanese government's position on the currency. The likely successor to Hatoyama will be Finance Minister Naoto Kan, and he is expected to take over and may be pursuing a weaker yen policy. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is our daily trend report, we'll take a look at the major FX option pairs. And let's start out with the AUX, which is the U.S. currency against the Australian dollar. Now, for that pair, a rebound is expected. The RSI is mixed with a bullish bias, and the preference of trading central analysts for the AUX is long positions above 114, with targets standing at 123.65 and 129.75 in extension. And for the BPX, which is the U.S. currency against the British pound, the upside does prevail. Now, the pair is pulling back on its new support or former resistance ahead of a rebound. The preference of trading central analysts is long positions above 67, with targets at 71 and 73 in extension. For the CDD, which is the U.S. currency against the Canadian dollar, consolidation is expected. The RSI for the CDD has struck against a major resistance around 70% and is reversing down. The preference of trading central analysts for the CDD is short positions below the pivot of 108.75, with targets standing at 102.50 and 99.50 in extension. For the EUI, which is the U.S. dollar against the euro, the upside does prevail. Now, for the EUI, that pair has rebounded on its new support and has broken above its previous high. Now, the preference of trading central analysts for that pair is long positions above the pivot of 78, with targets standing at 84 and 86 in extension. For the SFC, which is the U.S. currency against the Swiss franc, the upside does prevail. Now, the RSI for the SFC is supported by a rising trend line, and that pair has broken above its resistance and should post a further advance. The preference of trading central analysts for the SFC is long positions above the pivot of 112.80, with targets at 119 and 122 in extension. And moving on to the YUK, which is the U.S. currency against the Japanese yen, caution is advised. Now, that pair is pulling back on its new resistance, and the RSI is also mixed and does call for caution. The preference of trading central analysts for the YUK is short positions below 92, with targets at 88 and 86 in extension. And in our next segment, we'll bring you our weekly trend opinion. Now, taking a look at last week's action in the FX markets, the U.S. dollar did not face weakness and was strong against all the majors. But the bullish trend does remain in place and currently does not show any reversal signs. And in terms of portfolio performance, since its inception, which was in August of 2007, it has been up by 1,353.55%. And since the beginning of this year, the portfolio is up by 73.45%. And now we do bring you a couple of trade alerts, beginning with the SFC. Now, this week, trading central analysts are still cautious, and this is due to the high volatility on an intraday basis. Therefore, in terms of the SFC, trading central analysts did recommend in their last follow-up on Monday to buy calls on the SFC. Now, the pair is on its new support and should post a further advance. They are also looking at the EUI, which is the U.S. dollar against the euro currency, because it has broken above its previous highs and does remain on the upside, as the daily RSI is also well directed. Now, looking ahead to next week, trading central analysts will be paying close attention to the CDD, the AUX, and the PZO. They will be looking at the CDD because it is rebounding on its intermediary support. but the daily RSI for the CDD lacks upward momentum. And we're also seeing the same pattern in the AUX as the pair is rebounding on its new support. Last but not least, they will be looking at the PCO because it is rebounding but approaching its medium-term bearish channel upper boundary. And that does wrap it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.